Good afternoon. I'm so happy to be here again with Jeff Boxler from Guaranteed Rate. I am Linda Elliott. I am a realtor in Santa Barbara with the Zia Group. I grew up in Santa Barbara, and now I get to do what I love more than anything, which is help people buy and sell homes in our beautiful area. So happy to be here. I do work with Jeff Boxler at Guaranteed Rate. He's helped everything from some of my first-time home buyers to my savvy multiple transaction clients. So he's been doing this about 20 years and knows his stuff. So welcome, Jeff, and thanks for your time.
Thanks for having me, Linda. I love just, connecting with you and engaging on this stuff because we're both learners and educators, and it's nice to be able to share back all the things that we see on a daily, weekly, monthly basis.
Absolutely.
It's
And I
definitely a
think
topic. Yeah.
we both have that real passion to help people. And
Yeah.
so you and I were chatting recently that many people in our area that are wanting to become home buyers in this area, which we do have very high prices compared to the rest of the nation, but people still want to be homeowners. And sometimes people make the assumption that they've got to have 20% down in order to get into a home purchase. And as you and I were discussing, that's not always the case. There are options for buyers. And I was hoping you'd could share some of those with me and with our listeners today.
Yeah, absolutely. And on this topic, the number one barrier to home ownership is down payment and closing costs. So if you look at any of the research studies, what's holding people back, it's the down payment and closing costs. And I would say definitely our government wants to find ways to help people overcome that hurdle. And we'll talk through all the different ways that they are doing so. But also just to be aware that it's not 20%. I mean, it's just kind of the headline that people have held on to for decades. And 20% is not required. And so that just kind of frees up a lot of people to go, whoa, this is maybe possible today, and I should at least look into it. And it doesn't mean that you should do it before you have 20% down. The numbers will help us know, and everyone's scenario is different. And a lot of people might not have had the time to save up the money yet, but they're making good money and they can afford the payment. And the payment is what matters, right? The payment is what matters when we're comparing home ownership versus rents. And so we're wanting to make sure that we get those numbers right. So on the path to home ownership, putting that less than 20% down, Linda and I thought that it would be helpful to go through what are some of the bullet point loan products, minimum down, depending on the loan product you qualify for. So here we go. The whole purpose of this is to help, again, start planting seeds for you that this might be possible sooner than you think. And it never is too soon to get your loan application in, as it's free. Most lenders nowadays are starting to do soft credit pulls, which is what we do here. It doesn't ding your credit score, so there's no impact to your credit. And it allows you to get firm grounding on where you stand. So if you think any of these might be something that you could qualify for, or at least be in the realm of, I would recommend reach out to me, reach out to someone else that you might know and trust, to get yourself, one step closer to knowing where you're at with all this. So less than 20% down pass. The first one on here, okay, is the California Dream for All. We're in California. This is all the chatter for first-time home buyers right now. It allows for up to $150,000 from the California state government budget for individual owners to put on their down payment of a house. That could be 20% on a $750,000 house. That could be 15% on $1 million house. Okay. You have to fit certain criteria. It is a lottery system. You have to get pre-approved by the 1st of April. So if this is something of interest and you need the help with the down payment, and you fit the criteria of being a first-time home buyer, your parents don't own a home, there's a few different clarifies that I'd be happy to go through, and Linda and I did a great job talking through. You can definitely check out that interview, more commentary chat around it, that you should, if this is something interesting, check that out and then reach out to us. We'd be happy to help you. But that does allow for 0% down, okay, up to $750,000, which in Santa Barbara community is a condo purchase, and a lot of other communities across California, you still might be able to buy a nice, a starter home or a very nice home, okay? So depending on where you're at and where you're listening in, this could be really useful. If you're a veteran, okay, so we have some veterans in our community that tend to hang out in a certain part of our community, but an hour north, 45 minutes hour south, there's a lot of veterans at different bases, and they can do as little as 0% down. Okay, so veterans get the benefit of 0% down. That is one loan. There's no mortgage insurance with it. The interest rates are fantastic. It's very well subsidized by the federal government. They want to help you and thank you in so many different ways for your service. We all do. We at Guaranteed Rate even give the lender fee for free, which is $1,640. That's a lot of money off your closing costs for the veterans as well. So there's really nice incentives there to help veterans into homes, and that's your next 0% down option if you're a veteran or married to a veteran. Okay. If you're not a veteran and for whatever reason you don't satisfy the California Dream for All or don't get the chosen in the lottery, Fannie and Freddie are the next best option for limited down. Okay. 3% is their minimum for low balance conforming, which is loans of $766,000 and below. Okay. You can put as little as 3% down on a house. You can put as little as 5% down on a condo. Okay. There are grant programs too for first-time home buyers that might even get you some closing cost coverage, depending on what county you're in, depending on what your income level is, or even some down payment help. Okay, for that 3 or 5%. Okay. We're not going to go into the weeds on those because they're so specific to county. They're so specific to income. They're so specific to even areas within the county. So just be on the alert and feel free to ask any lender you're talking to, hey, do I qualify for any first-time home buyer benefits and any grants, etc. that might be useful to me in this process, given that I have limited down, but I've got good income to qualify for that payment. Okay. For high balance conforming loans, this is loans that are over that $766,000. Depending on your county, there are high balance conforming. In some counties, not all counties, but in Santa Barbara, you get another $100,000 or so of conforming loan limit, which allows for a 5% down option. Okay. And that's really nice for a subset of buyers, and not having to come up with more than that. Okay. So it is always confusing. Fannie Mae has low balance conforming and high balance. They're far more supportive to a home buyer. Okay. Conforming through Fannie Freddie, the guidelines are more open, welcoming to low down payment, higher debt ratios, etc. in general. And that's where the federal government comes in. They're really pushing companies like ours and so many other banks, etc., to try to find every which way to help out those low down payment buyers and bring more people into the fold of home ownership and make it more accessible to people in home ownership. So if you talk to anyone internally in our company, we're having monthly meetings. Not me personally, but our higher ups are having monthly meetings with Fannie Mae, Freddie Mac on how we're doing with these metrics. What can we do more? What areas of the country need more support and help to help bridge that gap to home ownership? So you've got the government trying to help you. And so the other government arm is the FHA programs. And a lot of people have heard about these and know that they're low down payment options, 3.5% down. Rates are much better than Fannie Mae, Freddie Mac typically. Okay, their mortgage insurance is higher. So Fannie Mae, Freddie Mac, 3%, 5% down, require mortgage insurance. Depending on how much you put down, what your credit score is, etc., whether there's two of you buying, mortgage insurance varies widely. Okay, FHA's mortgage insurance is static, no matter what your credit score is, so long as you qualify. If you're putting 3.5% to 5% down, it's one level. If you're putting 5 to 10% down, it's another level. So their mortgage insurance is higher, but it's static and not so consequential to your credit profile. Okay, where FHA is more difficult than Fannie Mae, Freddie Mac is condos tend to be more difficult to get approved for FHA. Fannie Mae, Freddie Mac are more open to condos. And then some of the appraisal process for what the quality of the home is, FHA requires a little bit more scrutiny than a Fannie Mae, Freddie Mac loan. That goes the same with a VA. Okay, so the government's saying, hey, we're giving a lot here, we're subsidizing a lot here. We want to make sure that this house is standing, it's safe. There's not a lot of extra layers of maintenance that's need to be done immediately, like peeling paint, and like they want some of that stuff cleaned up. And sometimes that can get pushed back onto the seller when you're in contract if you have a FHA or VA. Okay, so Linda could kind of share, I'm sure you could share a little bit about like if you're some of the challenges with putting less down when you're making an offer, right? If I'm looking at a couple, I was talking to someone the other day, and they were another realtor the other day, and they were saying how their client just wanted to put 5% down, even though they could put more down. And so their pre-approval was showing 5% down, though they had money for 25% down. They weren't chosen in their competing offer because they had less down. So just know that, like, if this is all you can do, then this is all you can do, and you might have to pay a little bit more for the price, right, to compete. You're less strong on down payment, certainty to the seller, right, Linda? But so to make up for that, you might have to go a little higher on price, or might have to shorten your contingencies, or might, I mean, need to find other creative ways to make a deal work, right? Especially in our environment. But it's not the same in every community. But do you want to share any color around that?
No, you were right on track. Yeah, it
Yeah.
depends on the circumstance. Is it one offer? Is it an offer within competing offers? And you know, a realtor, an experienced realtor will be able to walk that buyer through that process and the pros and cons. And also in coordination with the lender, the realtor and the lender should be working hand in hand to best represent that buyer in that given circumstance, to put their best foot forward. And yes, we all have limitations to what we can put down or what we can pay for, but it's our job to help them at least put that best foot forward, even if that means shortening some contingencies or releasing them, or just getting creative how to be more competitive. But go ahead.
Yeah, and the concern from the seller side, right, is
Right.
you're putting less down, Okay, what happens if the house doesn't appraise for the value we're agreeing upon? Like I might be a seller that's like, I was kind of reaching for the moon here. I'm excited that someone's taking this or multiple people. Like, like, like it's really hard to price in a market like this. Like some things are selling really quickly, way over, and others are sitting. And so it's hard to get that right. Well, if I'm a seller and I'm getting an offer and I'm like, I don't know, could it appraise for this? If you have a little bit money down, I need to know quicker that the appraisal is supporting the value, because then we can all move on quickly if it doesn't. And if it does, then great. Like I don't care whether you're putting 3% or 30% once the appraisal comes through and I hear that you've released loan contingency, right?
I
As a
think
seller.
what's so important here, and you just went through a long
Yeah,
list of
yeah,
options, is that for a buyer, it's really important to have their team of
yeah,
advisors.
yeah,
Truly that the experienced realtor and the experienced lender, now even an experienced insurance person that can
absolutely.
advise them and give them options so that they can make the appropriate choices. I just am so grateful because I think there are people that are out there that probably qualify for those programs and that they're not aware that they are there. They're waiting and they're saving so diligently to get that 20% down. And maybe they qualify for some of these other options. So reaching out to someone like you to say, hey, tell me more in detail about the following programs. Hey, I am a first-time home buyer. Hey, I am a veteran. I think getting that dialogue started. Also, you touched on a really good point. We've been focusing on Santa Barbara, Montecito, Goleta, because that's the market that we are in. But your company is also licensed to do lending outside of California. I
Mhm.
have a great referral network outside of Santa Barbara in California. So we can still provide that expertise for people and answer those questions and put them in touch with somebody that can get the job done for them, even if we can't.
Absolutely. And then like, if I'm licensed in 11 states, so I can be directly your person helping you, but the states beyond that, a lot of them, I'm your like phone a friend, like sounding board. I'm still part of the process. But I'm just not the one locking in your loan and being able to quote rates because I'm not licensed in that state. But yeah, you now have two phone a friends and Linda and myself that could be really valuable, because there are times where it's like, oh, like I'm just getting to know this person. They said something that didn't really sit right. Like I'd love to bounce it off someone else just to see, like, is that intuition accurate, or is that just anxiety that, like from somewhere else, like in the world that came into me, and it actually is misguiding me because I should still stay trusting this person. And there's a lot you're trusting us with. And we take that seriously and we care about it, and that's why we try to communicate so well and do these, have these conversations so people can ramp up their knowledge. To, again, you don't need to know all of it, but at least plant seeds so you know when to raise your hand, whether it ends up being with us or someone else in the future.
I got you a little off track. Was there anything you wanted to say about jumbos with a 10% down? I think that was
Yeah,
still on our
great.
list.
So jumbo loans, 10% down is required. So that's anything over, depending on where you're at, which county, either 766,000, 800 whatever thousand, almost 1.1 million in Los Angeles and San Francisco counties. That's jumbo land. Okay, that's any loans above that. And they're going to require you put 10% down. Okay, so you can do that in one loan with no mortgage insurance, or you can do it with a loan of 80% and then a second mortgage for the next 10% to get you to the place you need to be. So depending on the scenario, it might make sense to just do one loan or two loans, but know that that's possible. We see this a lot for doctors, lawyers, etc., coming out of college or grad school. They start making a lot of money quickly, but they haven't had the time to save up the money. Or you got hired on in an amazing tech firm and you're getting restricted stock units, and but they're not vesting so quickly, and so you're like, I got a good paycheck, but I don't have the savings yet, and I will in a year or two. Well, you can cut the corner, get 10% down on the jumbo, or 3.5% or 3%, or any of these, right? And now you're experiencing home ownership, you're renting out a room to a friend, like, depending on your age, that might be the way to do it, is, just get in, and piece it all together. So, or if you're married, now you got a kid on your way, you're like, we haven't saved enough, but we do have two great paying jobs. We want certainty. We want to know where we're going to be at, right? We hear this story all the time, Linda, right? Like, and that leads to, what do we do? Well, the sooner you talk to us and start just, putting things down on the page, the better we can help you plan, and get you more comfortable with, maybe this is the way to do it, in a safe way, that you're not walking such a thin tightrope, because we want you successful, like, our business thrives on referrals, right? And our referrals thrive based on people that feel like we cared for them, we looked after their risks, we helped them have the best chance of home ownership. And when that experience goes well, people, can't help but tell people about us. So that's what we're doing every day, is hearing what people want, hear what they need, how to solve that problem in a way that's supportive of them. I mean, that's why everyone loves you, Linda, is you do such a great job of asking, inquiring, caring, walking them through, getting them the information. And hopefully this call is just another, support to that.
Thank you. I'm
Yeah.
very dedicated and passionate about helping my clients. And I think the other piece of that is being committed to staying informed. Our market is changing. Interest rates are changing. Insurance is changing. People's income, are changing. Their family circumstances are changing. Things are in such a state of flux that we have to stay in touch with all of that to be able to advise our clients which way to go. So hopefully, what we're doing is a help and an education for them, and helps guide them toward their homeownership goals and financial goals. It occurred to me while you were talking, actually, that even getting somebody in 10% down, if they've got the income and the qualification, also their tax circumstance changes. They've suddenly got a tax deduction on mortgage interest up to a certain point based upon what their CPA is telling them. But that's another benefit. Like, it's basically savings instead of paying rent.
Absolutely.
I loved a saying I heard recently about someone said, you're going to pay more, you're going to pay rent every month. Are you going to pay it to yourself, or are you going to pay it to your landlord? And my goal is to help my clients pay themselves every month and increase that equity in their home and get home ownership, not be paying it to a landlord. I love landlords, but I would rather my clients be their own.
Hey, all it takes is one bad landlord and I get a call.
That's right.
Like, that's what happens. Like, great landlord for the last 10 years, and oh my gosh, what they're doing, what they're saying, what they're trying, like, what they won't do. It's like, it just takes one bad landlord. And so I always say, you're going to buy a house someday, or care to buy a house someday. We don't know when. Get started now, get grounding now. And again, this could be helpful 5 years, 10 years, 20 years from now, but at least it gives you an idea of where you're at, instead of speculation and thinking it's not possible or it is possible.
Well, I know we need to wrap up. We're getting to the end of our time, but you make a great point, Jeff, as I think many people, they're very kind, conscientious, courteous people. And so they don't want to waste our time. I hear that. And they say,
all the
oh,
time.
we're probably a year out from buying, or, oh, we're just looking right now. I don't care. You don't care. That's my job, is to help people find their home. I'm happy to spend a little time with a buyer consultation and start sending them some properties just so they can give me a thumbs up, thumbs down, and get them to you or another lender to get pre-approved, so that they know either what they can afford right now, or if what they can afford doesn't meet the goal of the type of property they want, what are the breadcrumbs they can use to get to the point that they can afford that home in a year or a
Yep.
year and a half? Maybe
Yep.
they've got to sell a property. Maybe they're relocating from another state. These transactions take time and nurturing and planning. I say it always starts with a dream. So I think
Yep.
you're the same. Bring us your dream. Let us help you achieve your dream, even if it's a year, 18 months out. Get started.
Amen. Yes. I think it's so important and so true. Like, and I think a lot of people too are like, well, I don't know them well enough. I feel like I'm going to start like making them feel like I'm going to use them. Not like use them like in a bad way, but use them as like they're going to be my realtor. They're going to be my loan officer. Hey, we work with enough people. We know you like it's okay. Like if you end up using someone else, ultimately, we're grateful we helped you down the path. We obviously would love that you use us, but don't let that be the reason why you don't get the information you deserve and need to make good decisions for you and your family and your life and your dream. And like, don't get so caught up on like, well, if I spend an hour with Linda, then I'm gonna feel like I always have to use her, and I don't even know her well enough to know if I want to use her. Like, just spend the hour with Linda. You'll be better for it. She'll be grateful to spend the time with you, and we'll worry about that later. Like so.
I wouldn't do this if I didn't like meeting people. So,
Yeah, exactly. We're both very much people oriented, and we just love being a part of that dream. So give us
yep.
a shot and just
Give us
have
a
that
shot.
conversation and really is meant to be helping you get grounded in where you stand and where you need to be and where you want to be, and let us help you there.
Thank
That
you so
said,
much for your
I know you've
time.
all got some questions. We're gonna pause the recording now, and if you have questions, feel free to reach out to us individually. Every story is unique. Here's our contact information. And then we're gonna pause the screen share, and if you got any questions, reach out. We'd be happy to answer them in the chat or individually via email or phone.
Terrific. We're here.
Thanks, Linda.